Hello, everybody. Let's go ahead and review all three markets today. See what's valid, what's invalid, why I would engage, or why I wouldn't engage. So let's start with indices. I don't think there's anything to engage ourselves with on indices. Well, first off, it's FOMC, but just because it's FOMC doesn't mean you can't take a trade. I'd probably de-risk or something like that, right? But this is pretty ass. It would be really nice if we just hit this fucking high. Indices just doing indices things, right? But yeah, we fall short of this high. That would have been really nice to see. We don't get that. And even this here, bro, like this high is what we want to take out because right now we're just in consolidation, right? Failure swings off the lows, failure swings off the highs. So like anything in here, bro, is just like ass. Like if you're asking me, if you're asking me, I think it's ass. You have failure swings here, here, and then obviously YM is leading these highs. So it's just like, why even engage with it? Like why? And then we did opening up 930 at the current low of day. I hate this shit. Like I never engage with price when it's like this. Literally, it's at the current low of day. I'm not gonna chase price like that. There's no like this little gap right here, whatever the fuck. Like where's the framework to go lower? Like there's no reversal. There's no like established reversal to high day. It's like why would you trade that lower? I don't give a shit if it works. Like I don't give a fuck. I don't care if it dumps a gazillion points lower. I'm not catching it, bro, and it's okay. That's just okay with me, and it does go from there. But it's pretty mid, right? It's not even like it's a valid gap fill because the gap fill already happened, dude, and it failed. It's right here. It already happened here, and it pretty much failed. So there's really nothing there, dude. You could say like a two-stage PSP or whatever, but at this point, dude, like, look, whoa, the hell did I just do? At this point, we're like really close to this high. It's just ass. It's just mid, super mid, in my opinion. If you're asking me, bro. If you're asking me. But yeah, that's indices, bro. There's nothing for me to take. I would never take it in my life. So yeah, that's indices for me. And this is pretty mid for FOMC now because the draw is already taken. So probably don't expect too much. But let's go to gold. Gold. Gold is a little bit better. It's not much better as far as the higher time frame goes, but it's a little bit better. So, when we look here, as far as the daily chart, there's really not much going on. The high of the week is not really formed from anything relevant. We're just kind of internal to this. Remember, we formed this here. This was my idea coming to the week, to be honest, like because nothing else makes sense. Like you can't. It's like why would you be predicting a reversal off here? Like what did it trade into? Nothing. When I look at this universal model, this is always what we frame, right? Universal models. When I look at this universal model, S&P at the lows, and then look at the opposing side of the range. So this is your reversal off of this low, and we're going to target the range high. That's our key level and draw on liquidity. That's what universal model is. This is looking pretty good, right? We're trading really high in premium of this range. That's a good thing to see. And we're forming a gap. We're forming a gap after forming reversal. So we know that in the universal sequence, this is high probable gap typically, right? So we can maybe look to frame longs to these highs. This is always a good framework on any time frame. So you're gonna see that Friday printed a reversal here. So I'd be expecting a potential Monday expansion, right? But it kind of gets ruined in a way because it gaps higher first. Like you have a huge gap from here to here. So price typically has to rebalance these gaps, and that becomes kind of awkward now. Because it's not like you can catch this move up anyways. And it ended up just retracing way too deep, and that gets validated. So now you just have like a failure swing almost, or like a high of week that's not really relevant. Price trades down into this relevant low though. See this relevant low down here? If you want it to continue, like this is where we want price to reverse from, honestly. It just doesn't do it. If you play price forward throughout the day, we kind of have this type of consolidation signature, right? Where it's not really a reversal signature off this low. So this here is somewhat of a framework kind of, right? Because if we're gonna fail to manipulate this low, then there's context to go lower, right? So there's a reason to go lower. You always want like a reason to go higher or lower on the higher time frame, and you just align a universal model in that direction and a profile in that direction. So if there's a reason to maybe not, or maybe continue this low, as you can see this consolidation, right? Look at this consolidation over here. Okay, now that's cool. We have a reason to go lower, right? We could target the previous low potentially, right? And then you have a consolidation highs up here. And we want to see price open high first, right? Now we gap lower. Again, pretty ass, but we gap lower, which does create an SMT here. We want to see a reversal off of this high. Ideally, this is the only thing I don't like about this, is when we hit this high, we don't immediately reverse. That's not ideal. But if we go over here, it's like Euro and stuff. I think we do immediately reverse off like one of these highs. It's like this one or something. Yeah, it's this one. So you get really close proximity SMT here. Now, this is a two-stage SMT, SMT plus PSP on the 4-hour here. Now, technically, inside of this wick, you do get a strictest PSP, but I'm not going to count it, honestly. We're going to see that on silver. I don't really care about it that much. You see this PSP? It's because, like, we're just continuing to technically, are we holding this SMT right here? This SMT right here? Technically, are we doing it? Yeah, but it just keeps resweeping. It's not really manipulating anything, so I don't really care about it, honestly. It's mainly the 4-hour close that makes it obvious. And I just wouldn't trust it until we create gaps, right? Like, see, we're creating gaps now? Okay, cool. Now, this is a potential universal model, right? For on the 4-hour and above. We always want a 4-hour and above universal model, so this is what we have, right? The 4-hour key level, we have a swing point from low of day. 18, or not 1800, but Asia's like the low of day. 1800 on silver is a low of day, which is good. But yeah, we form a gap, right? And if we go on silver, this is what Splash took. I think it's a good trade. Use the silver trade here. It's pretty good. Play price forward out on the hourly time frame. This is what you get. SMT fill here. Look at the V shape as well, guys. Expansion, expansion on the hourly time frame. So that's good, right? We're framing a higher type of key level, so you want these higher type of reversal signatures. Unless you're trading the very reversal, then obviously, you don't have that confirmation because you're trading the initial expansion away. But we have that here. And then look at this, guys. Equal lows at the lows. This is really good to see. So we know that there's this move higher isn't a reverse to go higher. That wouldn't really make sense because it doesn't really trades anything. You have these equal lows, and then this S&P fill right there. You can drop to lower time frame, and you could take like a positional entry like this, and it's in a kill zone at 8 o'clock, right? This next candle is 8 o'clock, so that's another good thing you want, is you want to be in a kill zone, right? So anything up in here or whatever, not really valid. You don't really want to take that, not in a kill zone. For gold or metals and oil, it's 8 o'clock, right? For indices, it's 9:30, unless there's 8:30 red folder news, right? So you're good there to take that. And the price expands into these unestablished lows here. That's at least 2R. Like an easy target, super easy target. And you don't have to be right about it going all the way down here. That's what is really good about taking these higher tempered models, is like you don't even have to necessarily be right about it going way down here. You can have close proximity or internal objectives that have 2R. You could partial there. You definitely want ideally partial here, unless you're in with one mini or something. But if you're in with a lot of micros, partial something here, because your overall RR is 7. You don't want to give back 5, 6R for nothing, right? At least partial something here and then go break even. But that's a really nice trade in my opinion. We ended up forming a gap here, but there was no SMT or anything like that in it. But you do want to see a continuation from that, and you ultimately get it. I actually don't know if it hit. It didn't hit the draw yet, but that's what you'd be holding towards, obviously, right? I don't think there was a gap fill or anything like that. Yeah, there was not. Okay. But yeah, if you took it on gold, that's also fine too. Gold has let's put gold on the left. Gold right here. Yeah, there's an SFT fill here, guys. It's just with the highest gap in the range. So it doesn't really matter which asset you take, right? There's SMT fill there, obviously, and a 2-stage SMT with this PSP. You have a bearish candle a bullish candle, so it doesn't really matter. But you guys see, like, there's a little bit more framework here. It's a little bit easier to trade or frame, I would say, rather than indices, right? You know, this candle is pretty much opening high first. Here's the open, opens high first, really. And yeah, it's like seek and destroy almost, right, into a low, right? So expansion into a low, seek and destroy, that's not a reverse signature. The only high really to reverse from, we do. And yeah, continuation sequence to the current day low. Respecting EQ the previous day's range. So pretty simple there. And I would say that's okay. It's like okay trade. Now let's go to oil, pretty mid. So you have framework on the higher time frame with the week opening low first. You see the week opening low first, no high of the week. You have an open draw on CL. This is like really good, but it's just the reversal confirmations were really mid. So you have an SMT fill as well, right? You guys see that SMT fill? So a potential weekly IRL ERL, so really good, right? But it was pretty mid on it, in my opinion. So you even get this here, really mid close though, honestly here. But there's a two-stage PSP, yeah. You want this to form like a reversal candle though, and this an expansion candle. That's how you want it to form, really. You just don't get that. And as you can see, there's just no confirmations, you know, leading into the close really. So it's kind of hard to even trust this as an established low, to be fair. And we just gap up, like we just gap up. So this is why it's mid. Another reason why it's mid is let's look at the reverse signature. You know, it's pretty bad. It's like, I don't know, it's just a bunch of failure swings, honestly. This is like straight up consolidation. Does this look like a reversal to you guys? Not really, right? Not really. And we don't like this SMT where it just keeps on sweeping, while this one just holds failure swings. You see why that's kind of mid? It's pretty mid. But we just gap up and just fucking rock it. So that's fucking mid. Not like I would trade this gap or anything like that, because no stuff. I just wouldn't trade this, dude. I'm gonna be for real. Even like this gap fill, it's like whatever. This is pretty mid too. I'm not gonna lie. So look when this forms. So you see this swing low. This is technically the gap low. I've talked about this before. You see this swing low. It's a failure swing, but this is technically the gap high. Technically, you see that, the gap high. But inside of this gap, this higher type of gap, if you draw it out, you have a relevant low in it, and you want to wait for that to get swept, ideally. So this is the actual level we want to get swept, that relevant low inside the gap. So once that gets swept, now you have a relevant low engaged. And you technically get a two-stage SMT. You see this PSP, bullish, bearish. But look over here. When this forms, dude, it's pretty mid, I'm telling you. So look what happens here. So you get like your potential string switch, but see this low here? It gets taken on this asset. It's just looking weird. It's looking weird. Technically, this is the low right here, but we trade way beyond that low and just create failure swings. it's ass, you know. So I just wouldn't trade that shit, dude. It just expands beyond it and away from it. And on the 30-minute, I mean, this is two inside bars back to back. It's not really the cleanest price action. I don't know. It's just something like I would probably avoid, dude, because of these failure swings and whatnot. Because of there's no established low day. It's just like I'm good. I'm not gonna force anything, but it ends up working technically. You end up getting no. Wait. Yeah, no. Even this right here. Price retraces back into a gap over here. Leaves these lows again. Pretty ass. If this asset took out all these lows, then they might have like advanced premium discount. That would be something. That would be something to trade. But no. This is just straight up consolidation. Does it not look like consolidation to you guys? Straight up consolidation here. So like it's like while this asset's consolidating, like this asset's retracing, I just wouldn't trust it, you know? So, you know, there's just not much going on, you know, and that's like most days. So there's just not going to be much going on. And it's not really too much to pull the trigger on, you know? We're just waiting for high probable stuff, guys. Did you guys see how this is like not high probable stuff? So I did want to do a recap on stuff that's just like, you know, not high probable. or like reasons why it's not hyperbole, reasons why something is more hyperbole. Like on gold, I would say it's a little bit better, right? There's like a reason to go higher. There's a reason to go higher here too. There is. But the confirmations, the framework is bad. The daily profile or whatever is it's just bad, right? So, and yeah, I laid out the reasons why I don't really care about indices, honestly. FOMC is going to be a waste of time, in my opinion. But yeah, that's really it, guys. Hopefully, you learned something. Catch you guys later.